The stock market continues to be rocky, causing concern for those that want to retire or are in retirement. We're going to look at what to do if you've had a big drawdown on stocks or your financial investment, so stay tuned for the full episode. Welcome back. This is Richard with Wisdom Investor. The stock market is continuing to have a slow drain to the downside, causing a lot of frustration for those who are in retirement or thinking about retirement. One person I talked with said they are down $1 million. We're going to take a look at that and see what could have caused a big drawdown of $1 million in their retirement account. Talked to someone else who said they're down $30,000 and they're concerned about their retirement funds because they're getting close to that retirement age. Now, at the time of this video, the S&P 500 is down nearly 20% off of the highs here. However, I know many of you are in individual stocks. We've had a big drawdown on stocks. The technology stocks started it to the downside, and then recently retail stocks have taken some big hits to the downside. Let's take a look at this person that lost $1 million. What happened? What can they do now? Maybe you're in a stock. You're wondering, should I sell it? Should I hold on to it? Here's a weekly chart of Shopify. SHOP. Now, back in 2019, this stock was selling for $150 per share. It doubled to $300, doubled again to $600, doubled again to $1,200, reached a high of $1,762. Look what happened since then. This thing has been down almost 80%, all the way back down to $361 per share. So this person that says they're down $1 million, one of their stocks was Shopify, down 80%. There may have been other stocks involved too. They didn't say that. We're looking at the stock of Netflix again on a weekly chart. Highs of $790 per share, down to $388. We're looking at Amazon on a weekly chart. Highs of $3,773, now down to $2,000, all the way back to where we were in March of 2020. So we're back over here to Shopify again, down to $361. What are you going to do at this point here? By the way, if you have any suggestions what a person should do if they're down big on some stocks or ETF funds, leave a comment. They're much appreciated. Now, this person here has already taken a pretty good hit. So one option is to just go ahead and hang in. Question is the market going to continue to go lower? We're going to take a look at that in just a moment. Now, another option, a second option would be to go ahead and sell it right here. And then when the market starts to turn around, take that money and put it into a stock that you think is going to be recovering much quicker than Shopify. Shopify may be hurt for quite a while. So if you reinvest it at a later time in a stock that's starting to take off, when we get a next bull run, you may be able to build that count back as quickly as possible. So those are two options. One, go ahead and just stick with it. The other option is sell it and then reinvest at a later time in a better quality stock that's going to be moving much quicker to the upside. So I want to hear what you have to say on this. Leave a comment on what you would do at this point. Now let's take a look at the NASDAQ 100 QQQ one more time. It's down 30% off the highs. Now it's taken 5 months for this move to the downside to occur. If we compare this to the pandemic, it took about a month to reach the lows in the pandemic. It was quick. There was a lot of fear. There was people being laid off. There was companies shutting down. People didn't know what was going to happen here. And then the Fed stepped in and the market recovered. Now the bad news here, the Fed may have let the market recover too much before they started raising interest rates. And now we're getting a reaction to the downside. We're looking at the weekly chart on the SPY right now. Again, down about 20% off the very highs. Again, you can see the pandemic here. The question now is the Fed going to come in, step in, and push the market back up again? Now, here's what one of the Fed presidents said last week. Inflation-fighting Fed isn't focused on impact of rates on stocks. Okay, so the Fed says they're not as concerned with the stock market as they are with fighting inflation. That means they're going to continue this fighting inflation with higher interest rates. They need to see inflation come down. Now, let me ask you this, and I'd like to get your input. Where do they exactly think prices are going to come down? Is it housing prices are going to come down to cause inflation to be lowered? Is it going to be in some other type of industry? Somewhere, somebody has to start lowering their prices. Right now, I don't see that, but where do you think that's actually going to come from? Now, it's not only the NASDAQ stocks and the retail stocks that have been taking a hit to the downside. We're looking at JP Morgan here. The financial stocks have also seen some big drawdowns to the downside. So looking at the S&P 500, we've zoomed in on this weekly chart here. It's very important that the S&P 500 stays above this level of 380.54. If we start dropping below that, it's going to be bad news for many, many stocks. Now, if the S&P 500 can start to rise, as they say, rising tide lifts all boats. So we should see a rise in most of the stocks and ETF funds. Keep in mind, though, we're in a bear market at this point, and surprises are to the downside. If stocks continue to come out, they're downgraded because of future earnings are going to be lower than projected, that is going to be bad news for the stock. Our scripture for the day is Philippians 4:6. Do not be anxious about anything, but in everything by prayer and supplication with thanksgiving, let your requests be made known to God. So the Fed's plan to lower inflation is by raising interest rates. Most likely they're going to have to go much higher than where they're at right now. Now, what's going to happen down the road if they continue to raise rates is we're going to start to see job layoffs. That's unfortunate, but most likely that's what we're going to see. And then job layoffs will lead to some type of recession. Then eventually we'll see prices start coming down. So I want to thank you for watching here today. Stay tuned for our next update. This is going to be interesting.